July 18th, stock playbook. A little sample video for you guys out there, a little taste of what we do for free for our subscribers every night. Dow Jones closed down 94 points, 0.8%. NASDAQ Composite 24 points, 0.9%. S&P 500 down 10, 0.8%. All three indexes cut their losses in half. Dow was down 183 points, NASDAQ Composite over 45, S&P 500 18 or 19, I think, at the lows. We weren't buying this bounce. We said there was no volume behind it. We thought it was just end of quarter window dressing, heavy volume. All these mutual funds print up their nice glossy little end of quarter reports, and the last thing they want to have to tell you as an investor in their funds is that they suck. Okay, so they want to let you know that it's a real tough market and they lost money, but look at their top 10 holdings they're sitting on, and it's always the biggest winners for the quarter. Worked with them, for them. There's a reason. You know, you hear every quarter I'm talking about window dressing. We said it was probably going to happen down here. We said we wouldn't be surprised to get a rally into the end of the quarter. Window dressing, light volume into the July 4th holiday. We got that volume. And then we said, okay, it's done. And here we are, heading lower. I thought we'd have heavier volume to the downside with some of the headline risks that we see every day, debt ceiling, China inflation, the Eurozone entirely. But we'll see. You can expect the bulls to try to defend that 1,300 level. They like to defend big round numbers, hence we got a snap back above today. It might last for a day or two, but ultimately we got to date with the 200 day. If we fail there, I think it's lookout below. But we shall see. We don't want to go ahead. We don't have a crystal ball. Try not to pretend we do. We just share with you, I share with you, my opinion. That's it. I could be wrong. I've been wrong before. I'll be wrong in the future. But I still think the best way to play this market until things change is to the short side. Netflix gave us a great opportunity, and that's a perfect example of a window dressing stock running into the quarter. Perfect opportunity to get short. We have earnings coming a week from today. The stock is down, 20. At one point it was down 30 points, from the 300 level. So we think this goes lower. Apple, it's been resilient. It happens every quarter. They got earnings coming tomorrow after the close. I think Apple sets up as a real nice short. You need to have a hedge in place. And I would much rather see you just play an option. You want to know what we're doing? Sign up for our free trial, just like we did with the Google. We'll have a play on Apple tomorrow. We're betting lower. I'm not sure if I'm just going to buy an outright put, maybe put a put spread on, maybe a calendar spread. We will let you know tomorrow. But Apple looks lower. I'm already short the stock. I already own a put. Okay, but I also own an upside call to protect myself in case this thing runs to $400 tomorrow too. Deckers, DECK. I have a nice short position in Deckers, but I'm looking at buying some puts on Deckers. They have their earnings coming out. We have a few other shorts that we like. One stock I want to talk to real quick because I got some emails from some of you that are looking at this for free. HWAY. I talked about it at length on Friday. Very excited about this stock. Nice pullback today. That's what you want to see. Let it pull back into the 16 level, and then you put a real tight stop in place. It'll close under 1550. But I got about 3 people ask me about HMSY. They also provide cost containment, revenue recovery, reimbursements, and benefits coordination to the government healthcare programs. The reason I didn't mention this one on Friday is because this is a stock I've been talking about for the last year and a half, 2 years almost. All right, we were looking at this stock when it was down in the $40 range. So, while I still like this stock, still think it goes higher, I'm a little less excited about getting long a stock that's already up 90+% from where we bought it. I do want to draw your attention to one thing from a valuation standpoint, which I like looking at the fundamentals and the technicals. Why not use all the tools in the toolbox? HMS, just all you need to look at is this. You see the quarters, the revenues. Let's call it, it's 300. It ends up being 320 million. But look at 80-ish million a quarter average, right? $2.1 billion market cap. That's a billion. $2.1 billion market cap. 7 times its trailing 12 revenues. Now let me go to Healthways, HWAW. All right? Again, focus here. Averaging $80 million a quarter. Healthways. Look at this. Healthways is averaging better than $175 million a quarter. They are averaging better than twice the revenues of HMSY. Look at their market cap. $564 million. This company's trading at a fraction of their trailing 12 revenues, while HMSY is trading 7 times its trailing 12 revenues. Just wanted to point that out to you. HWAY. We really like this stock. That's it for the playbook. You want to see the rest of our picks? We got a bunch of pullbacks, great stocks that we've mentioned before. TAOM just keeps ripping higher. We mentioned it here in this video, a week or so ago, maybe 2 weeks ago, when it broke above the 10.5, 11 area, now 16. If you caught any of this move, take some off the table. You make 50% in a week, you take some off the table. Ring the register, as a certain TV personality likes to say. That's it for the playbook. I'll talk with you tomorrow.